There are some great businesses on sale, but there are also ones that maybe are facing a systemic decline in front of them.
Hello, folks, and welcome to Stock Club, the podcast where we find and discuss stocks that anyone can buy, many of which we believe will go on to grow your wealth. We're approaching our 300th episode, and this is number 298, I believe. And to celebrate, we have something special. Well, we have 30 of them and no more. February's Horizon stock pitch, which is coming on the 26th of February, is a departure from my usual MO because to find it, I started with an almost unheard of academic paper that analyzed nearly 500 US stocks that went on to grow tenfold, and it asked and answered the question, what actually mattered before that tenfold growth? So I ran that research paper through 3 custom-built AI systems in parallel, they don't touch each other, to screen for companies exhibiting the same pre-multi-bagger characteristics. And the results knocked my socks off because only one company was common to all 3 AI systems. And it's an almost unheard of business. I'd imagine less than 1% of you have heard of it. And I have been considering pitching this stock for the longest time, which Mike can attest to. So I'm doing it. I'm going to pitch the stock. And at the end of this month, I will also link the published paper that I referenced in Horizon. So we have a great offer because no rational person will want to miss this. Our offer is 50% off. That's $1,500 off Horizon. And you get Nexus 1, 2, and 3 included. So hold the line. That is our 3 international stock picking services, which commenced 3 years ago for Nexus 1. Last year was Nexus 2, and Nexus 3 is currently in flow and is finding some of the greatest international investments of our time. And we are going to give that bundle to you, or to 30 of you, for just $1,500. And of course, you will learn the company that I'm going to pitch, that 3 AI systems, all identified, exhibited the attributes from the academic paper, which is going to be published as well in Horizon. So Horizon, by the way, is now quarterly enrollment that we've started. So it's a short window, as they say, and you can secure this deal for pennies on the pound, or indeed cents on the dollar. Okay, on with the show. Mike, how are you this week?
I'm good. I'm curious now after that pitch.
Oh, yeah.
Yeah, but no, tipping away. You'll be happy to know that my Wall Street has a new fan. It's our 298th episode. My mother is finally listening to the podcast, so that's all good. Yeah, she texted me. This Porter fella really knows his stuff. So there you go.
That's brilliant.
That was the other thing as well. It wasn't even a podcast I was on. So
hello, Miss O'Mahony. Well, I tell you, that's it. She's like, I listen to ones my young fella isn't on. Yeah. Sure, they're the best ones.
So she might learn something from them. But no, all good. Staring out at a very rainy, dreary day here, but I think that's pretty much universal for anyone listening right now.
Oh, yeah. So you're in the south of Spain, I'm in the south of Dublin, and it is pouring rain here. I shut the blinds because I couldn't bear to look at it.
Yeah, but we've a good episode today. We're talking about what's been called the SaaS Apocalypse, which I think needs to come up with a better brand name. But this has been, in fairness, it's been a recurring theme now for a while. This AI threat to software companies. But last Tuesday is when it really came to the fore. Not so much it was already happening, but in a kind of catalyst, I suppose. So we're talking about when Anthropic released Claude Code, which is an AI assistant for automating tasks for legal companies. This started out, it sent ripples across global markets, and a domino effect pretty much ensued. Obviously, first of all, were the companies specifically in kind of publishing and legal software. So Thomson Reuters and LegalZoom, I think both of them had their worst day ever on record. That's quite logical. That's a very prominent and real threat to what they do and their business models. But it didn't stay contained in that industry at all, and basically spread like wildfire to anything anything software in the entire market. The kind of consensus was, if it can replace this quite complex software stock in the legal business, an industry that's worth billions, what's next? So what if this agentic AI tool doesn't just replace legal assistants? What if it replaces kind of the core apps that every major enterprise across the world uses? So in the space of a couple of days, markets lost about $1 trillion in market cap. The Nasdaq fell 5% in 3 trading days. IGV, so iShares software ETF, was down 11% in the same time. There's more to it than just that. Like Mr. Market really didn't like how Google and Amazon were planning on spending on AI, which is kind of illogical in a sense. We have AI is going to kill software team on top of, wait, why are you spending so much on AI? But that is a different argument. We're here to talk about software specifically today. And as you can imagine, once markets turn red, everyone starts acting incredibly rationally and put together. So analysts from Barclays asked in a research note, is this the end of software? Those in Jefferies suggested that software companies could go the way of print media or department stores. And this is kind of an enduring theme. I imagine it's easy to get clicks and likes and all the rest to just come out with these big bombastic statements. But it definitely is there. This AI threat is not a new thing, and it's led to some serious declines in former market leaders, and basically a huge re-rating across the board in terms of valuations for some of the top software companies. So this is as a time of recording, down from their all-time highs. I'm going to run through a couple of big names we'd all know. So CrowdStrike, a stock very much benefiting from AI, is down 27%. Salesforce down 47%, ADP, automatic data processing, down 31%, Paycom 76%, Intuit 44%, Workday 50%, SAP 37%, HubSpot 72%, Atlassian 80%, ServiceNow 54%, and Adobe 61%. That's a diverse group of businesses. They serve very different industries, and that's only a few big names. Give me 10 more software companies and they're going to have very similar drawdowns. So it is a blanket downturn, 100% motivated by this long-term looming AI threat, but then very much exacerbated by starting valuations. So the sell-off is so extreme because software companies have always carried such high valuations. They were always valued on revenue rather than earnings for the most part, because they're highly scalable. You build a product once and you can sell it 1 million times, with more or less the same fixed costs. That's obviously incredibly high margin revenue then because of that. You've got long-term contracts. It kind of ensures stable, transparent revenue for the years and years to come. Why wouldn't anyone want to invest in that? And we saw that, as in software has dominated the markets for, I'd say, coming out of the GFC in 2009, 2010, that whole period up until 2022, 23, was completely dominated by software stocks and the SaaS business model and this kind of revolutionary cloud technology that just made everything so easy. And I think Mark Andreessen had the famous phrase, software is eating the world. And it very much was for a long period of time. And that's why valuations, especially now, it's funny, I was looking through all these businesses. A lot of them peaked at the end of 2021. So that post-COVID run-up where everything just kind of went absolutely nuts and valuations went completely haywire. So those drawdowns aren't specifically from the AI threat alone, but they're very much exacerbated by that. And I think if you're looking in general, a stock can't carry a premium valuation with this now impending threat looming. Its other very moaty characteristics for the industry as a whole are coming under threat too. Like I mentioned, scalability, which was kind of underpinning the whole software movement. The per seat model now is under threat because not only are there major tech layoffs across the board, but there's also higher efficiency from AI tools. So there's less developers or designers or account managers or whatever else now needed to do the same level of work. In the future, who knows? The speed in which AI is moving is terrifying, really. So it brings all that into question. Do you know what I mean? How much of that work can be completely automated by AI? Because that is, business leaders have come out and said that, that is their goal. And it's very dystopian, but it's true. So now the argument for high margin software companies being valued on multiples of revenue is coming under fire. Hence why we're seeing such a universal decline across the board, irrelevant of the industry. We're bringing CrowdStrike into this. It's one of the huge beneficiaries of that. So that's where we're standing now. Obviously, I believe that the threat to, say, Adobe is a lot stronger than the threat to ADP. I don't think AI is ready to completely disrupt payroll. But that being said, maybe ADP's unassailable moat will be challenged in the coming years. That the notion that a lot of these companies will adapt to AI and be the entry point for existing clients. Maybe that makes sense at first glance, but maybe it unravels when you think about the AI native applications that are inevitably going to come to market. Do you know what I mean? It's a bit like the introduction of licensing software versus SaaS, which is ironic in a way, but the barriers to entry have come way down for new entrants, and we could be at the precipice of a whole new way of doing things. Do you know what I mean? That like is in.
Yeah.
I don't want to be extreme because I don't believe it is the case, but for a lot of non-mission critical software businesses, they could be up for grabs. That revenue that they're creating, someone can come in and do it a lot cheaper. And then I guess that's what we're here to discuss. Really, is to distinguish
It is. Yeah.
between the baby and the bathwater. Because at the minute everything is being thrown out,
Yeah.
but there's no doubt that there will be a number of winners in the software market. There'll be a number of AI beneficiaries. There'll be a number of ones that just don't really feel the same threat. And I think
That's right.
And I think that's what we're here today to pretty much discuss. Is there are some great businesses on sale, but there are also ones that maybe are facing a systemic decline in front of them, and that's what we're looking at. So to kind of define that and identify the industries, identify the companies, and see which way I suppose the wind is blowing in terms of software, because it is a very interesting concept right now in terms of the market.
It is. And in fact, when you pitched the idea to me yesterday about let's have this debate, I really locked in. I'm looking forward to our conversation here now, because it's not binary. And binary, I mean, it's not that everybody there. We don't know. We don't know how the future is going to play out. And even when you see the stock market shed a ton of value in a matter of hours, a fraction of trillions of dollars in a matter of hours, it just goes to show that nobody really knows. Nothing changed in reality in those few hours,
No.
only perception and understanding.
No, but this,
or at least
this is what we're saying. Like, like as in a legal assistant that can automate a couple of paralegals' tasks, and ADP loses 10% of its market value, like, $10 billion.
It's crackers.
But
it's crackers. And you happen across a few names, which I hope we talk a little more about. But I saw a very interesting post on LinkedIn only this morning by a woman who I don't know, called Clara Shih, which is the best summary that I lean towards agreeing with. And I say lean towards because I have not 100% bought into any specific argument. I'm all ears and my mind is open, but no one actually knows. So I wouldn't mind just giving our listeners a quick summary of Clara Shih's LinkedIn post. She said, I wonder how many times she's heard the joke. She said, that's what she said. Her surname is Shih. So Clara Shih said, and I quote, Claude Code has transformed how I manage both my 1,000 plus person organization at work as well as home life. But far from SaaS Apocalypse, I believe agent solutions will actually usher in a SaaS golden age. Okay. That's quite an interesting one. It's what caught my eye. She says, first, every business relies on a set of deterministic workflows, e.g. legal approvals, and guardrails, e.g. customer must sign by 11:59 p.m. Therefore, the overall system needs to be governed by determinism, even if AI is injected in places to make individual processes and the system better. For example, in B2B sales, there are AI use cases for researching prospects, automating outreach, etc. But boards won't accept an AI-generated forecast that the VP sales can't explain. A VP sales won't accept an AI-generated forecast. And there was repetition. She made that point twice. SaaS is essentially a system of governance and accountability for employees and each C-level leader. And she goes on to say, second, the core value of SaaS has always been coordination, not productivity of a single employee. VPs oversee managers and reps, HR coordinating across managers and employees. And then she says, this is why classic SaaS features such as access control are so important. What Ben Thompson describes as SaaS capturing institutionalized processes. And third, AI models are changing fast. You don't want to be locked into a single provider. It would be irresponsible knowing that a game-changing new LLM drops every few months from a different lab. And then she says, while I'm bullish on the category, not all SaaS will thrive. The entire sector is being taken down to the studs and reconstructed for and with AI. This is a good thing. Things people have hated about SaaS will get shaken out. One, unused seats will churn or get negotiated into AI
Mm.
credits. Two, pricey seats from bloated vendors that struggle to become more efficient will get replaced by leaner competitors. And three, complex implementations will be largely automated with AI. It'll be easier to audit and hold SI consultants accountable for faster, high quality implementations. And she goes on. But first thing I'd say is when I read it, I realized AI didn't write this LinkedIn post, which was refreshing because it was kind of it had a few human errors, but a human tone of voice. I've read so much AI output. I regret to say that I can smell when it's a human who wrote it, and there's an organic nature to this where she didn't say, "Hey, Gemini, tell me something smart to say." But what's happening, I think, Mike, right now is not. It's just not the end of software.
No, it
It's
couldn't be,
the
but
end of no.
it couldn't be, but
It's the end of lazy assumptions. It's the end of lazy assumptions about software because us investors are being forced now to really differentiate between tools that are easy to replicate and systems that are extraordinarily hard to replicate. And you mentioned Adobe there a few minutes ago. We had a full podcast about it. I would say about 2 months ago. And I, for one, believe that the business doesn't look like it's in as much trouble as the market has priced it, which, contrary to what you've said, I think it's an example that the baby went out with the bathwater. And I'm starting to think paradoxically that AI is making the distinction of really valuable companies clearer,
yeah,
not blurrier.
I think I use the term lazy, and I think that's a very appropriate word because it goes both ways in the sense of what she said, she too is.
Mm,
Um,
yeah.
in terms of software spending, I think is going to come really under the microscope now because
Mm,
technology teams are going to have a certain budget, and so much of that is going to have to be dedicated to AI. So they're going to consolidate vendors for sure, and the non-critical stuff is going to get washed away. So those kind of hangers on won't be around anymore. And I think this is going to play out over the next 2-3 years. Of we're going to find out through people through people voting with their wallets what is truly mission critical and what isn't. And that's going to be a tough distinction for especially stock pickers, is figuring out that, because there will be software companies that fall in the wayside from this. Just surely, sure,
no doubt about it.
from a dollars and cents perspective, there isn't enough money in tech budgets for a
Yeah,
software that only 3 designers use, and they're paying the minimum.
entirely
The,
so.
the minimum spend is 10 seats or something like that. That is going to be axed,
That's
and
right.
they're going to figure it out. And those kind of non-critical platforms are going to go by the wayside. But that doesn't mean that software itself is going to go. And I think that's what she's really getting down to. Is what is mission critical, and that's the most important question I think you're going to have to ask yourself when you're looking at these stocks moving forward.
Yeah, you're right. I mean, AI, it just has suddenly and almost overnight reduced the friction involved in creating software. I think I was telling you yesterday how I uploaded a picture of my friend Donal to Claude, asking it for a caricature for his birthday WhatsApp group. And it returned the code for me to upload any photo to get a caricature. And of course, I didn't know what to do with that. I just looked at the code and went, I don't want, that's not what I want. I want a funny picture of Donal. So I just went over to GPT. But the point is that coding agents can now write usable code. It expected me to copy and paste that into something where suddenly I've got an app. And non-developers like myself can spin up these quick and dirty internal tools. And one of the terms that I learned the hard way through my journey in my Wall Street and founding the business 12, 13 years ago was this term technical debt. That as a business works through its life, it builds up a stack of technologies that is akin and analogous to monetary debt. You have a pile of systems and software that is redundant, half used, fully supported, partially supported. We don't know what it does. We don't want to pull the plug in case it turns out like this technical debt is a big thing. And when suddenly you have Egypts like me, and I'm not going to do it, but Egypts like me who are like, I'm going to write the code myself. I don't, it is going to build a whole pile of technical debt. I mean, prototypes that once took months to assemble are now being done in days, hours, maybe even moments. And I think this is what's called vibe coding. Is that what vibe coding is, Mike?
Yeah, vibe coding is essentially not for non-coders. They give
It's a great name, vibe coding, bro. I'm gonna do some vibe coding, then I'm gonna get some surf. It actually is a great name, isn't it? I'm gonna write an app, and it's gonna get my friend Donald's avatar, and then I'm gonna add surf, dude.
but that's basically
And the
it though.
audience,
But do you know what I
yeah,
mean? Like that is it, and I think it's definitely dumbed down a lot of processes,
yeah,
but it's also
yeah,
simplified ones that don't need that oversight. And then I think
yeah,
when it comes down to critical stuff, I tell you what, because in OpenAI is paying their salaries via traditional SaaS providers who have all the regulatory stuff and all the compliance and all the security built up. They're not vibe
yeah.
coding their own salary
This is
payment
true.
stuff, and
No.
that's when we go back to the same discussion of mission critical. Like, as in this vibe
Yeah,
coding thing is scary, and the other thing is as well, it's just moving
it is.
so fast. Do you know
Mm,
what I mean?
yeah,
We've seen this even from feedback from
and that's what some.
developers in the space of a year.
Yeah.
The
Yes.
capabilities of what Claude, we keep coming back to Anthropic's Claude, of its coding system,
Mm,
what it could do a year ago to what it could do now, is probably where the fear comes from. It's like, okay, well, this is blowing past all expectations in the space of a year, and it's only going to get faster. What happens in five
yeah.
years? Do you know what I mean? Is the art of
Oh,
software
yeah.
development going to be completely automated? Do you know that's where people are thinking?
Entirely. And this, like to your opening point, it's understandable why this is unsettled investors, especially in horizontal SaaS categories where products at first glance look replaceable. If software can be created for cheaper for free by flutes like myself, the argument goes that the pricing power will collapse. And why rent something when you can build it yourself cheaper?
Yeah,
And you think that problem, our problem with that argument is it confuses creation with responsibility. And what it does not do, any piece of vibe code, is make it easier to run software inside a complex organization where generally failure of a piece of software carries consequences. And that's just B2B. Like if you take Duolingo, which is, I think, a great example of a publicly listed business, which is B2C, business to consumer, you have to suspect that a business obsessed on reinventing the right way to learn a new language, which I think is probably one of the most complex and time intensive things you can take on. It has probably figured a few things that AI has not figured, or at the very least, it's using AI to make their tools better. But when I look at Duolingo's graph, as I am right now in the middle of my screen, last May, it was about $400 and change. Today, it's about $116 and change. Its share price is sitting at 5-year lows. It's down 77% last year. But when you look at the underlying metrics of the business, which is retained users and revenue and all those kind of things, quarter on quarter just gets better and better and better. But if I can loop this back to B2B, so that's B2C over there, most enterprise software isn't purchased because it's really clever. It's purchased because it makes an ugly task easy. It's auditable. It's compliant. It's supported. You can get onto someone if something isn't working. And I guess you could also say it's familiar. Now, if you walk into your chief accounting officer or your CFO in a Fortune 500 company, and you make a pretty good argument to say that you should replace an internal financial system with some new tool that a whole bunch of vibe coders back in Floor 8C have done, and they're great lads. They really know what they're doing. You can lead with the argument going, we can take this line out of our annual OPEX. But then you need, if you're going to be dutiful, you need to explain to that decision maker that you're going to have to migrate decades, perhaps, of historical data. You're going to have to convince everyone else in the place, if it hasn't been done through use and organic uptake. You're going to have to retrain staff. You're going to have to ensure there's really flawless reporting. And generally, there's a regulator sitting outside the window who wants to know everything is being done the way it should. And so I don't think, and this is why I don't even know what I think, but what I do think is that decision, the CFO going, yeah, do it, I don't think it's now. I don't think that there will be a rational CFO who in 2026 says, yeah, okay, come on, let's just do it the AI way. I don't think so. I suspect in 5 years, when we're quite a bit further down the path, when you consider the speed of development and the rate of progress in all these LLM tools, it will be more of a no-brainer. But I also believe in the intermediate time, specialist software companies, whether it's Atlassian or whether it's Paycom or whoever else, they will also be looking at AI. And what I mean is they will have a full suite of AI tools with bells and whistles that justify their cost, because it is still, they are the guys you go to do X. And they, of course, you've got the full might of AI harnessed correctly, supported correctly. And right now, I think that switching cost is the most underappreciated moat in software investing. I can see it now where I can sit with people, and my niece is a wonderful photographer, like one of the best. She did the cover art for CMAT's new album, and she's been on the for work has been on the front of Vogue, and like she's properly up there and well known amongst musicians, and is asked for by name. Hello, Erica. Hope you're listening. Absolutely no chance, because she's an artiste. Erica, I spoke to her about Adobe, and I rang her to talk about Adobe. Say, hey, Eric, what's up? Tell me about Adobe. It's the shares are cheap. And, her opinion, she didn't even realize the AI threat was out there. So, yeah, I think they're putting AI in the tools. But as somebody who's an absolute thoroughbred artist of imagery and all the things she needs to do at Adobe, like, that wasn't even in her consideration. And I think that's, I am always aware that an anecdote does not make data. Like, we all know, oh, well, my auntie smoked, she was 100, she never died of anything. And we can all cherry pick anecdotes to support a flawed or broken argument. And that Erica one is certainly it. But I think it is representative of this underappreciated moat in software investing. Critical systems are sticky because the downside of changing is asymmetric, I think you could say.
Yeah, I'm just getting more confused the longer we go here, because that's such a strong argument. But then is that also a specialist case? You said she's like, she's putting photographs in Vogue, whereas Adobe was mass market. Adobe was
correct.
Adobe was.
But I don't think you are confused. I think this is now where we can see that the road swings left and right, and you could say, like, so what was Amazon man Jeff Bezos, like, he was saying recently that AI will improve every application but not replace them wholesale.
Yeah. And you know what this argument comes down to is, when we're stuck in the now, I still think we're thinking of faster horses. We're not thinking of cars. Yes. Do you know what I mean? Yes. And it's actually hard to imagine 5 years time, with how fast even the last year has gone, what that looks like. And I guess that's the impending threat AI faces, is the unknown. Do you know what I mean? Because when we're talking about defensibility with software, we really don't know where technology is going. Like, as in, you talked about horizontal software there, and kind of mass market applications and platforms.
The enabling layer. I'm like, what is that? When I hear this, it's going to revolutionize the enabling layer. I just sit there and I just don't blink, so nobody realizes I don't know what they just said.
But I think one interesting aspect of this is vertical software, which is essentially, and but I'm going to talk about this through the guise of Constellation Software, which is down more than 50%, I think, in the last year.
Holy schmoly.
Yeah, but
that magnificent Indian elephant, it's wrong. Sometimes you see a creature being whipped onto its back legs in a circus, and you're like, that is wrong. That's what's happening here, folks. But Constellations are magnetic. You can't be doing that.
But so with vertical software, it's designed to meet very specific needs of a particular business or industry. So while broad market products for legal teams last week, or finance teams, that's where AI companies will concentrate all of their focus, because obviously that's going to be the biggest payoff. Do you know what I mean? Whereas, say, Constellation, which has a strategy of targeting very small niches, like, say, barbershop software or golf club management products, it's going to, first of all, going to be well down the list of priorities if it ever comes to that. But, not only that, its end users are going to be quite tech averse as well. I have a feeling that this isn't a strong defense, but if it ain't broke, don't fix it vibes. Will go a long way for vertical software. Not the case with broader market, like horizontal software. We're saying that. So Constellation is one that really does kind of pop up with me because of this tech diversity of its end users. And then also it also has a good opportunity to actually be the AI enabler for its clients.
Mm.
So
Mm.
obviously, like, as in, if one of Constellation's 1,000 companies, EmmettSavageSoftware.com, and you're a barber, and now all of a sudden you can automate your scheduling for the week. I don't know if barber Michael O'Mahony is going to be like, oh, I can vibe code this myself. Like, there's going to
Yeah,
be
I hear you.
there's going to be
Totally.
further opportunities in adding greater functionality for vertical market software providers. It's going to be kind of the AI wrapper of sorts, where like broad market tools like ChatGPT or Gemini or whoever else, they might actually not be able to be used. If it's a highly regulated market, they won't be able to use them. Do you know what I mean? So if you can take care of the compliance, the security, the auditability, what you mentioned earlier, that could make it a big winner. So on top of that, there's a lot of options there. And then my last point in Constellation as well is that it actually opens up the door for more M&A and opportunities, weirdly, as well. Because if you have, say, a legacy software business that has, you talk about technical debt and these old tech stacks, an aging founder that they're not looking to overhaul their business with AI, someone like Constellation can come in, keep all their customers while immediately and easily improving their product. So yeah, and that's not even to mention like the kind of government contracts and 7 years of bureaucracy and tender and procurement and all that. So if you're looking at businesses that have some form of defense to this AI threat, and it doesn't seem like a very, absolute steel-plated shield there, but there's just a lot of small bits that maybe negate this argument in some way, shape, or form. So that would be one of the opportunities I've identified from this, and I might move forward with my own. I think it's trading about 20 times cash flow, which is the cheapest it's been in a while. And obviously, Constellation was suffering from high starting valuations on top of all this as well. So that's one I've identified, but there's a lot there. Like, I think I didn't mention CrowdStrike. CrowdStrike is caught up in all this. That is for sure the baby amongst the bathwater here.
It is, yeah. It's funny, when the two of us agree we're going to research something, it's very hard when we get onto the microphone to make sure our conversation coalesces well and kind of weaves, because I actually have a view on Constellation. It falls under one of three headings that I kind of landed on in my notes here in front of me. But so if I may, let me just kind of go to the other side of the line for a minute, before I completely, because I went to AI and I said, hey, you. I said, hey, yo, Howie AI, what are the most vulnerable software companies out there that you're going to destroy? And explain why. I probably phrased it a little better than that. But AI said that the companies are the software solutions and companies, therefore, that are most likely to get destroyed by AI first. It didn't use the word first. I kind of put that in my head because I know AI is watching us. It said they are thin single function tools that sit on top of other platforms rather than underneath them. They have low switching costs and lack proprietary data or embedded workflows, which makes sense. Like, I had $1 trillion business idea about 3 months ago, which is now worth nothing. And the idea was, I wanted to get a bunch of coders to write a program that gives the thumbs up on every WhatsApp that's sent to me, because I do that manually. It's good manners. It shows the person I have read it, but I don't want to reply. It's a lovely thing to do. Big fan. I thought, that's $1 trillion idea. Now it's worth nothing because AI can do that. But I also thought, right, okay, if my idea is dead in water, what software companies are most likely to roll over based on those attributes that AI said are super vulnerable, like single function tools and sitting on top? And here's a list for you. It said, I wouldn't like to own these ones. So it said Evernote, Rome Research, Notion, Calendly, Doodle, Typeform, SurveyMonkey, which is floated, Moz, Todoist, Things, Basecamp, Miro, Loom, Asana, SimilarWeb, and SEMrush. Now, it gave a huge chapter and verse under each of those, which I just decided to leave for the sake of a fluid conversation.
There's a common line running through that of non-essential enterprise software.
Non-essential enterprise software. Now, interestingly, I then flipped it over And I kind of asked for its assistance in identifying the companies most likely to endure or better still benefit from the AI trend, if you like. I don't even know if it's trend is such as
Feels
it's such a weak
faddish
word.
compared to the
I know.
tsunami.
It did, oh, for sure. So number one, it said the businesses most likely to remain resilient and grow are systems of record. So that's number one. And there's platforms that have a source of truth inside them. And the primary example it gave, I don't like finding arguments that agree with something I feel or believe, because I don't want to be told, I like to have contrary arguments presented to me. But the number one it said was Atlassian. And a
Really?
long time, yes,
That's
which I know is,
interesting.
it is, because I'm pretty sure most people, and I suspect you, think it's super vulnerable. And the stock market has voted, as you said at the top of the podcast, when the crowd says no. But according to this piece, it said that Atlassian, because of all of the Jira accumulation, organizational memory, all the bug dependencies, permissions, workflows used by engineers, compliance teams, executives, auditors, and so on. Atlassian is currently building AI into everything it does. It's completely misunderstood at the moment, and as a consequence, it is getting more and more valuable. But like the whole narrative out there is there's seat compression, and people are canceling this and canceling that. But the idea that AI reduces headcount and therefore software revenue is overstated. And I can only say I hope it's right, because I am a shareholder in Asana. I love the founding team. I like their, I meant to say, sorry, Atlassian. The co-founders, I think, are brilliant. One is now still the CEO, the other's the chair.
Did you get a chance to look at his opening letter of this earnings call now?
No, did you?
Yeah, very bullish.
He's been hugely bullish. I watched a podcast with him. I told you my really good is
almost combative, I would say, in the face of the AI
that's
threat.
good. Oh, good, because I am very close to buying it again for Horizon, which I bought ages ago. And for all that I know, it's red on the scorecard. I haven't looked at the moment, but it is well down. I mean, oh my God. But I told you my super boring Atlassian story, didn't I?
I'm not sure. Go on.
I was in Sydney with John, my co-founder. We were meeting lawyers down there, and we're going up, and the elevator doors opened, and there it was, Atlassian. I went, "Oh, look, John, it's Atlassian." And then the doors closed and we kept going.
Fascinating.
Nice little story.
Bye.
So,
okay.
Yeah, bye. So there we go. So number one, system of record. Yeah. Number two, vertical specific software, which is exactly the point you just made, Mike, which is Constellation software was held up as the primo example. It's being cited as vulnerable, and its products serve too narrow niches, or niches, as you might say in America. But those niches have a moat. And Constellation software runs billing systems for utilities, municipal services, niche financial institutions, risk-averse customers. I think Constellation is a magnificent investment right now. And when you said it there a few minutes ago, I was like, oh yeah, I believe in that. And then the first of, as we said, was systems of record. Number two is vertical software specific. And the third, categorization that looks likely to grow and thrive as a consequence of AI, is creative and workflow platforms with distribution. And the example that my AI assistant handed me was Adobe. And it is the hotly debated example. And yeah, AI can generate picture of my friend Donal, or it can generate code for me to do it myself, and it can design code or give me a video of Donal. But enterprises don't buy Adobe for outputs. They're buying it for the workflows, the collaboration, the version control, the brand consistency. I mean, right now, Adobe is still the kingpin. And if you are a big buyer of all things imagery, I'm of the mind that Adobe still has that brand strength that gives the buyer the reassurance. Now, that's soft, squidgy edges. Adobe has just been rushed, but it does fall under a heading of creative and workflow platforms with distribution. So like replacing a point solution is easy, like my thumbs up on your WhatsApp.
Yeah.
But replacing an ecosystem is not. But then again, AI is up for the complex tasks.
Yeah. I keep falling back into this faster horses versus
Mm,
whatever Mr. Ford had planned for the people of Detroit. But it truly is like the only issue, and I think the arguments are strong for what you said, but the only issue I would have with something like Atlassian or something like Adobe is just sheer who's gonna become a graphic designer. So what 17-year-old is going to go into college and study graphic
I
design right
know.
now? Or
I
and
agree.
that's become software development now too.
Amazing. Amazing. I mean, only a matter of a few years ago, I remember saying to my two sons that learning how to code was today's equivalent of learning how to fix the plumbing and fix the
Yeah.
electrics, something my father taught me. And I'm saying, sorry, lads, I can't teach you how to code, but I do think you should learn how to code. I didn't go so far as to say I think you should study it in college, but I could have.
Yeah.
Not that they would have heeded my word and ran into UCD to study coding, but you know what I mean? It is now kind of like so vulnerable.
It's almost like it's ring fenced it in a way. And I think this is going to go, we're talking about ripples, and this started within the legal industry. AI is kind of taking over that graduate role. You can have someone more serious basically
Yeah.
give them a
Oh
virtual
yeah.
assistant. And then it's like, well, and I'm going off tangent completely here, but where do
Mm,
people learn?
mm,
In the next
mm.
10 years, if you're replacing all those entry level roles with AI, what's going to be your next generation of worker? It's not going to exist, because the people who
Yeah,
retire in
that's
30
right.
years that have used AI for 29 of them,
Mm,
who's got the skills
that's
to
right.
replace them? And this goes on. This goes on with the unknown of it all. And like we're talking about, the immediate effect and talking in the now, and it almost seems irrelevant because we truly don't know what's going to happen in 2, 3, 5 years time. And I think, in
No,
a sense, we've identified where to look in terms of that mission critical nature, in terms of something around like the complexities of compliance or regulatory stuff or systems of record, or that's probably being unfairly sold off along with stuff that is really really vulnerable. But that's what's happening now. What happens in 5 years time?
that's
So
right.
it's
It
got.
is, and that's why taking a hard view on this is ridiculous. It's folly because we don't know. We just don't know, and we're all just looking at AI like a giant ball of string, thinking we can interpret it. But I'm not so sure. And have you noticed as well, Mike? I mean, it's hard not to. That there's been a huge and important shift in the market where it's really starting to care about profitability again, and software companies where 10 years, 5 years ago, rewarded for growth.
Yeah.
They're rewarded for, well, we've increased the number of bums on seats by 50% in the last quarter, and be like, oh my God, bye. Oh, we missed it. But now it's like, I don't care how many butts on seats you have. We want to know how much money you have in the coffers at the end of the 12-week period. And investors are now really, we're asking, not they, we are asking harder questions about operating leverage and margins and ability to generate cash, like the very seat compression argument that seems to be omnipresent for Atlassian at the moment, is a proxy for saying, will you have less money next quarter? Are we all going to die? Like, it's kind of, it is very much a money conversation. And I think companies with really strong unit economics can use AI to manage internal cost. I mean, we're doing it in my Wall Street. I don't think there's a business I know of where AI is not being used to bolster customer support or accelerate development, or and ultimately expand margins a little bit, and those benefits accrue disproportionately for businesses that are very well run. And some software, of course, will be commoditized, the thumbs up on your WhatsApp, but some will be replaced. But I think a large portion of it, and a lot of the names we've discussed, um, they're tied to data and regulation, workflow, and all this. They'll become more valuable, not less valuable. Can I ask you a question that speaks to your intuition, Mike? Because you and I are both students of the language of French, and you're more immersed than I am. Do you, at a intuition level, have you been using Duolingo?
I gave up on Duolingo years ago.
Did you really?
I think
Why
it's
did you give
I
up?
think it's useless. I don't think you learn anything.
No, that's a stark. That's certainly knocked me off my bike. I have a 1,666. How many sixes? That 1,666 day streak as of now.
Yeah.
And I asked
So
AI, how
that's
many
what
AI, huh?
8,000 minutes of French.
I asked AI, how long will it take me? How long of a streak will it take me at 10 minutes a day to get fluent? And it said, the answer is you cannot. It's like asking, how many days do I need to do one push up a day to get ripped? And I was like, this is really bringing me down. Yeah, but look at you living in
Yeah,
France
I mean,
with a
look,
French partner
but
talking
going,
French
I'm
over.
back in flipping college. I have to go to university for 4 hours a week learning French. Do you know what I mean?
Are you really?
Yeah. So like
And is it
that's,
putting through?
yeah, 100%. But like that's accumulative. That's why I think with Duolingo, I'm not sure if it is. I think Duolingo would be one now for me that I would put on the X list. Not because of AI, just
Interesting.
because I don't
Wow.
think it solves its core goal.
Well, very now that's fascinating because before we got here, I was going to ask you, do you think that Duolingo will still be a thing in 5 years and will it still be a thing in 10 years? And am I getting your, you reckon it's probably in a slow walk out of here when AI overtakes it?
Well, look, in my opinion, I think and this is just one person's opinion, but it's it's gamified learning a language, but it's all gamification now. And I don't know if there's much language
Mm,
learning, which is not fair. Obviously, there's a lot of scientists there, and there's an awful lot of thought gone into this. But I'm not going to call you out specifically, but your
mm,
1,600 day streak of 5 minutes a day or 10 minutes a day. Do you think if you did
mm.
10 minutes a day of comprehension practice or listening or like, you know, would you be in
Yeah.
better shape? And also then
Mm.
the fact that it's like, okay, I can do it without really thinking. Is that good practice? Shouldn't you be thinking when you're learning a new language?
Yeah,
So the
yeah.
stuff like
The
that.
other thing I learned, there is a ramp up time when you're learning a language. You need to spend 5 to 10 minutes warming up. Like you will not actively learn unless you've been 5 to 10 minutes in that uncomfortable phase where you're like, I don't know what any of this means.
And
And then your brain limbers a little bit. It's a bit like reading Shakespeare. The first 3 pages, you don't know what just happened. And then click, suddenly you're reading it and like, it's just like your own language. Well, actually, it is, but you know what I mean. There's a warm up time, and that's anyway. That's quite an interesting segue on Duolingo.
yeah,
So, what are we doing, Micah?
I think
How do we land this Boeing
I don't
of AI?
I don't know if there is a nice clean way to tie this up, but
Mm,
I think there's two themes to this. I think there's identifying what's the baby and what's the bathwater.
mm,
There are definitely software stocks being sold off right now that are going to endure and even benefit. Finding them is more difficult than it was.
mm,
And then I think on the other side of that, there are non-essential software stocks out there right now that that their business model is seriously under threat and will only go downhill from here, I believe. So
mm,
finding
mm.
that dividing
Good
line,
point.
I think, would be the most important thing. I would think vertical market software would be areas where I'd be looking. I would be looking at what you said, system as record. I think like payroll stuff for me seems like it wouldn't really be touched, but who knows? Cybersecurity, I think, is only going to become even more important as that whole industry kind of shifts and becomes, the technology at our hands. If you think of it from a sinister way, what does that look like as well in terms of the development
Mm,
of threats? So there would be three areas I would look at strongly. Yeah, nothing more definitive than that. I am quite tempted by Constellation Software. I think that would be my finishing note. What do
mm,
you have,
mm.
if anything?
Uh, what am I? I am actually tempted by Atlassian because having overseen a company that had it wired into the smallest parts of our development, it is not seat compression. Yes, will there be less engineers coding? Probably, but will Atlassian's core proposition be wiped out as because of AI? I don't believe so. So I am looking forward to reading Michael, or is it? It's Michael Cannon Brooks. Is that his name
Michael
again? The
Cannon Brooks. Yeah,
CEO. Michael Cannon Brooks's letter when I finish this podcast recording. So I'm still feeling the love for Atlassian. I think it's been utterly maligned over reasons that I don't think are entirely rational. But I always hold up I might be wrong, but I think now is a good time to look at Atlassian.
Perfect. Okay. After that, 15 minutes of rambling. We'll finish up with the following profit. You have it set up, yeah?
Oh, yeah. Mike, it's following profit where you or I spotlight one of Profit's current 10 stocks or just tell me what to do service. Profit always holds 10 stocks. It rebalances monthly. A child could do it, but they shouldn't. Children shouldn't do this stuff. It's so easy. It is so beautiful. It is the most magnificent stock investing system that I've ever seen. And that is the truth. And as usual, I need to caveat that I'm about to talk about a company that in the knowledge Profit may sell it in a couple of weeks. We do not know. Profit has been built over 17 years to do something extraordinary, and it has delivered, which is why we only launched it a year and a bit ago. So on the 30th of January, which is just less than 2 weeks ago, the service sold Encore for a 10.62% profit. It only sold one stock, and it bought back in again to Ulta Salon, which is now up 7.55% since it made that trade. And we're recording on the 10th of February. So by the time you get this podcast, that number will have budged. So there you go. That's all I'm going to say this week, to be honest, Mike. I know we usually explain one of the companies because it gives a unique insight. But I know that Ulta has been in and out of profit, but it has done so in a very profitable way. And that's, it will not be beaten up by an AI superhero.
You don't think there's going to be humanoid
No.
makeup artists? We're going to be back here in 10 years talking about the threat.
No, I'm talking about profit.
Beauty salons.
I was actually talking about profit, but you're right. I think they're both safe. I think Profit the service is safe because it's already half cyborg with a twist of Marvel superhero. And I think Ulta Salon is fine because AI is not going to rub your head and clip your hair and tell you to look great or whatever happens in Ulta. You and I still need to go on our fact-finding mission into an Ulta Salon.
Okay. Right.
By the way, Mike, before I go, Profit is still only $999 a year on useprofit.com. But if you want a deal, you may email frank@mywallstreet.com and we might be able to do something for you. But it's still only $1,000 a year. Once you get a price, if Frank gives you a lower price, you've locked that baby. You don't have to worry about it. But later this year, we're going to ratchet it up because Profit just keeps delivering. And in times of stress, it also delivers. So there you go. Caveat emptor. Okay. Subscription apply. Like that. Spam and like that button. What is it? Spam that like button, folks.
Like and subscribe.
5 stars. Like them.
All right, Emmet.
Okay.
Thank you for joining me, and thank you for everyone listening. We will talk to you next week.